Thank you for joining Jennifer Schaus and Associates in our 2019 Webinar Wednesday series. We're coming to you live from downtown Washington, D.C. Our webinars are every Wednesday, and you can find the upcoming schedule on our website. Past webinars and all recordings are also on our website and on our YouTube channel, along with over 160 other recordings on federal contracting topics. All are complimentary. If you have questions for our speaker today, you can email or call him directly with the contact information you'll see on the last slide. And this is just a little bit about us. We are a Washington, D.C. based firm and provide services for federal contractors. This ranges from market analysis reports to proposal writing and also post-award compliance. More information is on our website, so please visit us there. And these are a few upcoming events that you can find more information on our website or also on this slide. And we offer advertising, so you can email me if you would like more information on that. And our webinar today is sponsored by AccuTrack, and here's a short message from them.
AccuTrack Consulting and Accounting Services is an 8A WOSB CPA firm committed to supporting entities that sustain growth in government contracting. Our outstanding DCAA accounting solutions reduce audit risk, improve cash flows, and give you peace of mind. Contact us today to learn how we can enhance your DCAA accounting efforts.
All right, so let's go ahead and get started. Our speaker today is Timothy Fern, and he's going to be covering SBA certification, what it takes. Tim, thank you for joining us, and I'm going to go ahead and hand it over to you.
Thank you, Mallory. Good afternoon. As Mallory said, my name is Tim Fern, and I'm a partner in the Federal Government Contracting Group at the law firm of Cohen, Seglis, Pallas, Greenhall & Furman in Philadelphia. I'm excited to be here with you today as part of the Jennifer Schaus and Associates Federal Government Contracting Webinar Series. This afternoon, we're going to talk about what it takes to get certified in the Small Business Administration's 8A Business Development Program. Next slide, please. And we can go ahead and skip to the next one too, Mallory. Thank you. The United States government has long supported small business concerns by implementing policies to ensure that a fair proportion of the government's contracts and subcontracts for both goods and services are placed with small business contractors. The current goal of the federal government is for 23% of its prime contracting dollars to be spent with small business enterprises. This is relevant to today's webinar because the current goal with regard to small disadvantaged businesses is 5%, and we're going to talk about what it takes to qualify to be eligible to compete for that 5% of business. Next slide, please. So what is a small business, and does my business qualify as one? This is the threshold question for the majority of the government's socioeconomic programs, and as you're going to learn today, it's also the key question for the SBA's 8A Business Development Program. Next slide. The Small Business Administration establishes small business size standards on an industry-by-industry basis. These size standards represent the largest size a business can be to remain classified as small, and are based on either the annual gross receipts of a company or the number of employees who work for a company. Next. Small business size standards are determined by classifying the product or service being acquired in the industry, whose definition best describes the principal nature of those products or services. This is done through a system called the North American Industry Classification System Code, often referred to as the NAICS code for short. The NAICS code classification establishes the applicable size standard for the acquisition. Once the contracting officer knows what NAICS code the procurement is going to be in, they're going to include that NAICS code and the size standard in the solicitation so that offerors can represent themselves as either small or large when responding to the solicitation. Next slide, please. Once you know the applicable NAICS code for your business, you can determine whether or not your business qualifies as small by checking the corresponding SBA size standards on the SBA website at the following link. Please keep in mind that being considered small in accordance with the NAICS code is the threshold question to being able to compete in the Small Business Administration's 8A Business Development Program. Next. In addition to being considered small as defined by the applicable NAICS code, a business concern must meet other basic requirements to be considered eligible for the 8A program. And what we're going to do is we're going to cover each one of those requirements in a little bit of detail. And again, at the end, if you have any questions, please feel free to reach out to me if we don't cover them here. Next slide, please. To qualify as an 8A business, the small business concern must be unconditionally owned and unconditionally controlled by one or more socially disadvantaged and economically disadvantaged individuals who are of good character and are citizens of and residing in the United States who demonstrate potential for success. It's important to note that an individual must be both socially disadvantaged and economically disadvantaged individuals. Let's talk about each one of those elements in a little bit more detail. Next slide, please. So how does the SBA define socially disadvantaged? There's a rebuttable presumption that members of certain groups are socially disadvantaged. Those groups are defined and identified in the SBA's regulations and include African Americans, Hispanic Americans, Native Americans, Asian Pacific Americans, and subcontinent Asian Americans. Next slide, please. To qualify as a socially disadvantaged individual, an individual must demonstrate that he or she has held himself or herself out and is currently identified by others as a member of the designated group. The presumption of social disadvantage can be overcome with credible evidence to the contrary, but in practice this is very seldom done. If an individual belongs to a presumed group, they are almost always qualified as socially disadvantaged. Next slide, please. If an individual is not a member of one of the presumed groups listed in the SBA rules and regulations, that individual may still be able to establish that they are socially disadvantaged if they can provide certain evidence of individual social disadvantage. Evidence of individual social disadvantage includes one objective distinguishing feature, such as race, ethnic origin, gender, or physical handicap, a personal experience of substantial and chronic social disadvantage, negative impact on entry into or advancement into the business world because of the disadvantage, and this could be based on education, employment, or business history. In other words, an individual needs to prove that a distinguishing feature has had a negative impact through actual personal experiences. So let me provide a quick example with regards to social disadvantage. Here at Cohen Segalese, we represent a lot of construction contractors. And in particular, we have a lot of clients who belong to the dredging industry. The dredging industry is very, very small, and it's male-dominated. So we had a client who was a female, and she was a female dredger, which was very, very rare. And she was able to show that she was socially disadvantaged, even though she was not a member of one of the presumed groups listed in the SBA regulations. And she did that because of her gender was her one objective distinguishing feature. She was able to demonstrate personal experiences of substantial and chronic social disadvantage. But her key to getting into the program as a dredger was the negative impact on entry into or advancement in the business world because of her disadvantage. So because she was a woman, that negatively impacted her ability to get into the dredging industry, and the SBA found that her company was in fact socially disadvantaged. All right, next slide, please. All right, now that we've discussed social disadvantage, let's take a look at what constitutes economically disadvantaged. And remember, to qualify for the SBA's 8A Business Development Program, an individual has to be both socially disadvantaged and economically disadvantaged. So how does the SBA define economically disadvantaged? Economically disadvantaged individuals are those individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the similar or same line of business who are not socially disadvantaged. So really the key is the ability to receive capital and credit opportunities as compared to peers or near peers. Next slide, please. In order to demonstrate economic disadvantage, an individual's net worth, personal income, and the fair market value of his or her assets cannot exceed certain maximum dollar thresholds. In other words, if an individual exceeds any one of these three thresholds, the SBA will find that he or she has access to credit and capital and therefore is not economically disadvantaged. Please note that as you look at the slide, there are two threshold numbers for each category. The first is the number that an individual must be below to obtain their 8A status. So when we look at that slide for personal net worth, you have to be below $250,000 to obtain your 8A status. And the second is the one that the individual must always be below in order to maintain their 8A status. So the $250,000 you see with net worth is to obtain, and the $750,000 you see with regards to net worth is to maintain. In other words, it's possible to lose your 8A eligibility if the qualifying individual's net worth, personal income, or fair market value of assets exceeds this second threshold. So let's take a look at each one of those three thresholds. To be eligible for the 8A program, an individual's net worth cannot exceed $250,000. And in order to maintain eligibility, an individual's net worth cannot exceed $750,000. In calculating the net worth, the SBA usually does not include the individual's interest in the 8A concerned, so they don't consider the amount of money or anything that you've invested in your company. They don't consider any equity in the individual's primary personal residence, and they won't consider IRA or similar retirement account funds. And again, these are always questions that are raised by clients as they become interested or are trying to obtain their 8A certification, is how do I calculate my net worth? So again, it doesn't include your interest in the company. It doesn't include any equity in your primary personal residence. And in most cases, it excludes your IRA or any other similar retirement account funds that you may hold. All right, let's take a look at that second factor. To be eligible for the 8A program, an individual's personal income averaged over the previous 3 years cannot exceed $250,000 to be eligible for the program. And in order to maintain eligibility, an individual's personal income cannot exceed $350,000. It's important to note that there's some recent changes here, and so it's your income is averaged over the 3 years, so $250,000. So if you had a very good year where you took out a lot of money, that kind of levels off if you had some other years that weren't quite so good. Your personal income is going to be your adjusted gross income on your W-2s, or I'm sorry, on your 1040. So we'll look at your adjusted gross income. And again, this is an area where clients always have a lot of questions on how to calculate personal income. And then finally, to be eligible for the 8A program, the fair market value of all the assets, excluding the IRA or similar retirement account funds, must be below $4 million. And in order to maintain eligibility, the fair market value of all assets, again, excluding IRA or other similar retirement accounts, must be below $6 million. So economic disadvantage is defined by net worth, personal income for the past 3 years, and then the fair market value of all the assets. Next slide, please. In addition to being socially and economically disadvantaged, and recall you have to be both, a business concern must possess reasonable prospects for success in competing in the private sector if admitted to the 8A program. To demonstrate potential for success, a business enterprise must satisfy something known as the 2 years in business rule. And this is different than the rule of 2 that most people are familiar with. The 2 years in business rule means that the business must be working in its primary industry classification for at least 2 full years immediately prior to the date of the 8A application. You'll recall earlier that we talked a little bit about the NAICS code and how size standards were determined using the NAICS code. So to be eligible or to demonstrate success, you have to be performing in that industry classification or in that NAICS code classification for at least 2 years immediately prior to the date of the 8A application. Now, it's possible to obtain a waiver of this requirement if certain conditions are met, but unfortunately, they're beyond the scope of this 20-minute webinar. So if you have any questions or concerns, again, please feel free to reach out to me, and we'll certainly do our best to answer those as quickly as we can for you. Additionally, to demonstrate potential for success, a business enterprise must show that it has access to credit and capital. And that ties right into what we were talking about with regards to economic disadvantage. So we have to demonstrate that you have access to credit and capital, and a business enterprise must also show that it has technical knowledge in the primary industry and that it has sufficient management experience. And management experience always becomes an issue for small businesses, And that's why we get into a lot of different areas with regards to our teaming and subcontracting and sometimes even our joint ventures. Next slide, please. All right. Last but not least, a business concern must demonstrate that it has good character. Determining good character is an analysis that's performed on a case-by-case basis by the SBA, and the SBA is going to consider the following. They're going to consider criminal conduct or past history of criminal conduct. They're going to consider whether or not there were any previous violations of any SBA regulations. They'll consider whether or not an individual or an entity has been suspended or debarred. They're going to consider lack of business integrity, and this is an issue that always arises when dealing with the federal government and in the contracting world, is whether or not a company has a code of business ethics and whether or not the company has integrity. I'll give you a quick story with regards to that. We had a client who had some issues with the Buy America Act concerning some bolts that they were putting on a project on flood walls in New Orleans after Hurricane Katrina. And this company is a very, very large construction company who was acting as a subcontractor. They recognized after they received these bolts for the floodgates that they were manufactured in India using Indian steel, which is against the Buy America Act. And so they talked to the government, and they talked to the contracting officer's representative, and they said, look, this is an emergency, just go ahead and install them. They went ahead and installed the bolts. And again, they were a subcontractor for a very large contractor, and when that contractor saw the invoices, they reported their sub to the government as a potential Buy America Act violation. Our client was very, very ethical, probably one of the most ethical companies that I've ever represented, had a good culture within their business. We were able to talk to the federal government, and after they were suspended and proposed for debarment, we were able to demonstrate that these were commercial off-the-shelf items, and that there wasn't really a Buy America Act violation. And the government came back and said, look, our big concern here is really the lack of business integrity because you didn't self-report. So the government takes business integrity very, very seriously, so it's imperative that you have a standard of business ethics and a code of conduct with each one of your companies, because this could be a major concern for you. Additionally, what the government will look at is whether or not an individual who owns a company has been incarcerated, or again, any other signs of dishonest behavior. And we've seen a recent uptick in this as well with regards to false certifications and false claims. Next slide, please. All right, so those are all the elements you need to be eligible for the Small Business 8A program. So how do you obtain your certification? So in order to be considered an eligible 8A entity, the business concern has to obtain its certification from the SBA. And this can be done by submitting an application via the link there, https://certify.sba.gov. It's important to note that a business must be registered in SAM before it will be eligible to use the SBA certification website, and you're also going to need to know your NAICS code. All right, and SAM is the system for award management, and that's pretty easy to find and navigate through. Once the application is submitted and the supporting documents are provided, the SBA will review the application and they'll notify the business once it's been approved or disapproved. And it's important to note that an SBA certification only lasts for a maximum of 9 years. Next slide, please. So once a business entity has obtained their certification, there are certain annual requirements or annual reviews that are required by the SBA rules. So participants in the SBA 8A program must submit information to the servicing SBA district office to support continued program participation. At a minimum, the annual review submissions are going to include certifications from the company that all eligibility requirements are met, certification that there are no changed circumstances that could adversely impact eligibility, and there's lots of examples of this. This would be some kind of arrest or conviction, some kind of income, something that changed with regards to your income that would put you up over one of the thresholds, anything along those lines. The annual review is also going to require the submission of personal financial information for each disadvantaged owner. It's going to require a record of all payments, compensation, and distributions made to each owner, officer, or director. And if payments or distributions are made to all three of those, then it'll require a record of all those payments. And finally, it'll require a listing of any fees paid to agents or representatives for assistance in obtaining a federal contract. And this is an issue that the government's very concerned with regards to small businesses when you start looking at the procurement fraud issues. And you'll note that there's a covenant against contingent fees, and we oftentimes have clients who have issues with that particular FAR clause. So I see we still have about 2 minutes left, and then I'll turn it over. So I just wanted to talk very briefly about some other small business programs and other considerations once you're in the small business program. The key to each of the small business programs, or each of the socioeconomic programs, is really ownership and control. And the small business has to be unconditionally owned and unconditionally controlled by the eligible person. And in this case, it would be unconditional ownership and unconditional control by our socially disadvantaged and economically disadvantaged individual. And so some of the common issues we see with regards to that really relate to long-term decision making. Does the socially and economically disadvantaged individual have the ability to make long-term decisions? And then also, do they have day-to-day management and control of the day-to-day business operations? So in addition to our ownership, unconditional ownership, unconditional control, another issue that always pops up is affiliation. And we don't have a lot of time to talk about it. But typically what happens is you'll see there's a small business who wants to gain past performance experience or who regularly relies on certain large contractors. And they'll continually go to that large contractor for assistance or to act as a subcontractor. So once you're in the program and you start doing teaming and subcontracting, you need to be concerned about affiliation issues, and these are things such as shared space, shared employees, any kind of past employee relationship, any kind of familial relationship, or financial reliance and control. So thank you very much. I certainly appreciate you taking the time to talk to me or talk with me about the SBA's 8A certification and what it takes to be certified. Mallory?
Thank you, Tim, for sharing your knowledge and insight today. Today's presentation has been recorded and can be found on our website or YouTube channel within about 48 hours. If you have questions about today's topic, please contact Tim at the phone number or email shown on your screen. Thank you, everybody. This concludes the webinar.